All right, folks, welcome to Investing for Beginners podcast. Today, we have our friend Brian Feroldi back. Brian is from the Long-Term Mindset Investing Group. He is a financial educator and a really smart guy. And today, we're going to talk about how you could use AI to help you research stocks. So Brian has come up with some really cool stuff that he wants to share with our listeners, me, and we can all learn today. So Brian, welcome to the show. First of all, thank you for joining us today. And I guess let's talk about AI and how you can use it.
Yeah, Dave, great to be back. So I don't know about you, but I have been a relatively slow adopter of AI in my life. When it came out, I played with it. I thought, holy cow, this is crazy. This is cool. But I didn't use it to kind of transform the way that I lived my life. I would say that has changed over the last year, where slowly I'm finding use cases in my everyday life where I use AI to actually help me make decisions. One quick one, AI is fantastic for cooking. Like you can take a picture of your fridge and say, help me make a meal. I'm grilling. I can take photos and say, is this done? So it's been helpful for that. But I've been very resistant to use AI in my investing process, but that has changed dramatically over the last couple of months.
Yeah, I'm right there with you. The other day, I had 2 or 3 ingredients in my kitchen, and I'm like, I need to make something. I want to make it with these. What can I make? And it gave me a list of like 10 things. So I was like, this is awesome. So yeah, I'm right there with you with the investing research. It's been very, very slow in the uptake. So let's talk about why would we use AI for fundamental analysis?
Yeah, so AI is fantastic at some things and it's not great at others. I think the best way to think about AI is you have to, at least from an investing perspective, is you have to think about AI as a very eager junior analyst with boundless energy. So this junior analyst is happy to read every single filing for you and churn out whatever answers you want it to do. But just like a real human analyst, the quality of the information you get out of it depends heavily on the quality of the instructions you put into it. You can't just say to a junior analyst fresh out of college, go find me a stock to buy. You have to give it instructions about what kind of stock you're looking for, how to think about it, what metrics to look up, how to measure those against benchmarks, what information sources to use it, to give a recommendation, to value it, and more. So if you've ever used AI to analyze stock and you just put something in like, is Google stock a buy? You've probably been horribly disappointed by the results because it's way too generic. So I've discovered some tips and tricks that can dramatically make AI a powerful resource for investors.
So what are some of the benefits to using your junior analyst, if we go with that analogy? Like, what are some things, how can it help you? What are some benefits it can provide to you?
All the ones that you can probably think of. AI is incredibly good at finding and organize information. It's really great at parsing through huge swaths of data and coming up with general points and conclusions. So it can speed that up. It can help you with organization. It can help you with structure and flow. It can fill in checklists that you create extremely quickly. So you and I come from the old school way of reading through SEC filings and kind of spending like dozens of hours on a stock only to come to the conclusion at the end, not for me or too expensive. AI can help you churn through SEC filings way faster and turn over way more rocks faster than you ever could before.
Yeah, and I love that part about the turning over the rocks, because that's part of the challenge, right? Is, to your point, if you're reading a 200-page 10K, that takes you a minute or two, right? And with AI, they can skim through the JP Morgan 229-page 10K very quickly, so it can be super helpful.
Yeah, absolutely. Speeding up the process, systematizing the process, those are definitely two of the biggest advantages of incorporating AI into your process.
So I guess would you say that AI is best for the gathering, summarizing, and like organizing of the data? Is there anything else that you need to do as it's doing all those things? Do you need to guide it, or do you need to know something?
Yeah, again, you can't just go to ChatGPT and say, is fill in the blank stock a buy, or see that Nvidia's in the news or Reddit stock is in the news and saying, should I buy this stock now? That's way too generic. You have to remember that large language models like ChatGPT, Gemini's, they're built on essentially the entire internet's worth of information. So if you give it vague instructions, it's going to pull from all different sources, many of which have nothing to do with investing. But this junior analyst is super eager to give you the information that you want in the best way that it can, and it's going to do that quickly. So the more specific the instructions you can give it and the more detailed they are, the better the output will be from your analysis.
Yeah, for sure. And we're gonna get to that juicy stuff here in just a minute. So I guess let's talk about some pushbacks and concerns. So one of the big concerns about AI, especially when you're talking about investing, is hallucinations. So how can we trust what our junior analyst is doing?
Yeah, I would argue that this is probably the number one reason why current investors do not use or rely on AI. They've seen AI used in other cases and they say, well, how do I know that this is accurate? How can I actually trust the data? To me, this is probably the biggest barrier that most investors have with going through and using AI as part of their process. To me, the answer here is to insist and instruct the AI to only use original sources of information. So I instruct my AI to only use 10Ks, transcripts, and original company reports when it's sharing information with me. And I also instruct it to share the link next to the data that it's giving me with every single bullet point that it has. That way, as you're skimming down, if it makes a statement about revenue or competitive advantage or a quote, the original source is right next to it, and you can quickly click over that to double check that the source is correct. Again, this is why the detailed instructions matter so much, because if you don't tell it to do that, it could pull from any number of sources, and it might even hallucinate quotes, or it might make up facts and figures. So if you simply insist that it uses original sources and links to them before it says anything, your ability to trust the data goes up by 100-fold.
Yeah, that's awesome. And that has been a key unlock for me as well. So how would you respond to people that say that, well, AI feels like a black box?
Yeah, another one. Again, if you just go to it and say, is Facebook stock a buy? And then it comes back and says, yes, is Facebook stock a buy? You're like, well, how did it come to that conclusion? What is it using to draw that information? What I've discovered about AI is that AI works best with specific instructions. And when it comes to analyzing stocks, you basically want to break down a bigger question, like, is this stock a buy, into numerous small focused prompts. So again, let's say we're researching Meta stock. You don't say, is Meta stock a buy? What you say is, tell me specifically about Meta's business and business model, and make that into its own unique prompt. Have the prompt go out, get the information, bring it back to you so you can learn more about the business. Another prompt should be, tell me about the key risks of facing Meta stock. Another prompt should be about, tell me about what phase of the business growth cycle it is. So rather than having one big prompt where you don't know where the information is coming from, and it does seem like a black box, if you break up the task into several smaller, repeatable, focused prompts, you can actually trust the process because you're just focusing on one narrow definition. In addition to that, it's important that you tell the AI the specific instructions and rule sets that you want it to follow to find, organize, and analyze the information. If you do that, you can actually have high confidence that it's not just a black box answer, but it's actually following a process that you have specifically approved of.
Yeah, that's awesome. And I have started using that exact idea and process to analyze the proxies of companies. So to look at the incentives as well as the pay for the management, because that drives a lot of what happens with the business. And it's an area that I am not as comfortable with. And so I've been using AI to help me kind of analyze that and ask it lots of questions and whatnot. But yeah, it's amazing. So I guess the key point with all this is it can do all the research, but can it really help you understand the company if you don't know what you're doing?
Yeah, the answer there is of course not. And some other pushback you often get about this is, well, can AI really help you? Will AI replace your judgment as an investor? The answer there is absolutely not. Again, you have to think about AI as a junior analyst. Its job is to go out, follow the instructions, and provide you with the information you need. But the ultimate decision making about, is this stock a buy or is this stock a sell? Should I add it to my watch list? Should I have a portfolio? Those decisions ultimately rest on you. You are the portfolio manager of your company. So AI can be an extremely helpful tool for figuring out information, for researching companies, for filling out a checklist. But the ultimate decision making should not be left to the AI. The AI should do its job to find the information, present that to you, and then you should be the final arbiter of what you should do. This is your money on the line, and I personally would not trust it to be outsourced completely to an AI. So AI is a tool that can speed up your research process. It's not a replacement for thinking.
Yes. And I think that's a key point to keep in mind as we talk through all of this. So, all right, we've kind of been teasing about prompts and kind of how to train our junior analysts. Let's start talking about that. So let's talk about maybe some 3 prompting techniques. So I guess let's kind of walk through them. Keep in mind, some of the stuff we're going to talk about today is not always going to be podcast friendly. So I will do my best as we're walking through this to act as a play-by-play announcer at a baseball game. So just keep that in mind. So let's talk about, I guess, what would you say would be the first step to creating an effective prompt?
Yep. And so step number 1 applies to any task that you are looking to do. AI works best when you first start by assigning that AI to be a role. In the analysis world and in the analyst world, you can do something as simple as saying, act as a financial analyst, as an expert financial analyst. Or if you're a value investor, you can say, act as Warren Buffett. If you're a growth investor, you can say, act as David Gardner. If you're trying to do a short sell, you could say, act as a forensic accountant. By simply prompting and giving the AI a role up front, what it does is it narrows its scope of research and analysis to data in its database that is just related to that task. So again, if you go to AI and say, is this stock a buy? It's using the internet to make that decision. If you first start by saying, act as Warren Buffett, suddenly AI has a filter where the only information it's going to be looking at is data in its database related to Warren Buffett. So if you say Moat, for example, it's not going to think ancient history castle moat. It's going to think competitive advantage as described by Warren Buffett. So the first tip for any AI prompt is to assign it a role. This will help you tremendously with the information.
Awesome. All right. So once we assign it a role, what do we do next?
Yep. So the second big tip for any AI prompt is to give it a stepwise structure. Give it specific information and a step-by-step logic flow that it should use and follow to do any analysis. For example, in the prompts that I built, I first say, acquire data. And these are the sources. These are approved sources that you can get data from. For me, that would be like SEC filings or company reports directly. I want original primary sources for that information. Step number 2 is to verify the sources, because even here, AI can make mistakes. And if you build into the prompt, verify that these are indeed accurate sources. And then 3, you can say things like, answer the question by following this specific framework. So for example, one of the prompts that I built just helps me come up with an overall business and business model analysis. And I can use this prompt to figure out, what does this company do? And when I have this prompt, not only does it go out and find original sources, such as 10K filings and company reports, but I ask it to go through a consistent flow, saying, what does the company do? What are its major product and product segments? Who are its customers? How often do those customers buy? What happens in a recession? There's like 7 or 8 prompts. And the AI is focusing on the specific steps that I gave it. So when I use this prompt and then I analyze any business, the output that I get is exactly the format that I want to see from sources that I actually trust. So if you give it a stepwise structure, wow, the quality of the information you get back is so much higher.
We touched on this before, but what's the importance of like the citations? Like, let's, I guess, double down on that.
Yeah, again, the number one problem with AI, and I've talked to a lot of investors about this, and the recurring theme I heard was, how do I trust the result? How do I trust the result? How do I trust the result? Right? AI has a history of hallucinating. AI has a history of make doing simple math wrong. So those are the limitations that are AI out there, and they're really just prompting limitations to them. So if you insist on original sources of information, and you also insist that any information that is shared has a link to that original source, then again, you can actually trust the data, because you can instantly click to see, well, where did it get this number from? Show me the documents that it did to use this calculation. And that just dramatically increases your ability to trust the information that you're reading.
How often do you verify it? Like if you're going through this, how often do you check those sources? Do you randomly just pick a few to make sure that your junior analyst is staying on task, or is it every single one?
Yeah, that's a great question. I would say it depends on the information that I'm pulling up and how vital it is to my analysis. So if you're looking at a company and it's just, what does this company do? And it says right next to it, source SEC filing 2024 10K, I'm pretty confident that that information is correct. If I'm doing analysis on what's the growth rate for this company, or what's the valuation for that company, that's like a specific number that I'm looking out for, that I'm way more likely to click through and actually verify, because AI struggles with numbers more so than it does with general analysis. But I would say this is something that you do get a feel for. The more you run these prompts, you know where the weaknesses are that need to be re-verified, and the strengths are where it doesn't need to be verified. But again, as long as you have the original source next to that thing, you can quickly look up, is this number actually accurate?
Yeah. So I know we're going to touch on this, but I wanted to throw something out there too. I think it's better to break all these tasks up into smaller bite-sized chunks, as opposed to having a Word document with 20 pages of a prompt. Would that be an accurate assessment?
Yeah, totally. Again, you shouldn't say, is this stock a buy, or what does this company do? You should have an individual prompt focused on each aspect of your analysis. So you and I, for example, I know have a very simple filter for analyzing stocks. Am I interested in the business? Right?
Right.
If step one is, what does this company do? And what are the dynamics of the business? For me, if the answer comes back and I'm just not interested in following the business, or the market doesn't interest me, that's the end of my analysis. I don't need the rest of it to know that that idea is not a fit for me. If I'm interested in the company after I learn about the business model, the stages of growth, and the opportunity, then I can go deeper and say, okay, let's think about the moat for a second, or let's analyze the key risks. And each of those are individual prompts. So the prompts that I've built are kind of ordered from top to bottom to be a filtering mechanism that I can use to analyze basically any company.
Awesome. All right. So we've been talking about prompting and how you could use this. Let's actually put it to work. So here is going to be the junior analyst at work, and Dave trying to do a play-by-play.
Yep. So I have in front of me about 7 prompts that I built, and these are for the podcast listeners. 1 is on the business and the business analysis. 2 is on the business phase analysis. So which stage is it in its growth cycle? I have 1 here on the moat analysis, 1 on the long-term potential, 1 on key metrics, 1 on risks, and the final 1 is on valuation. So Dave, I thought it would be good is if you could give me a stock that you know well, that I don't know well, so I could kind of researching it using these prompts, and you can do some real-time analysis to be like, is this information accurate based on what I actually know about the business? And we could go from there. So is there a company that you want me to take these prompts through?
Yeah, let's try S&P Global, which is the ticker SPGI.
SPGI. Okay. So I have a prompt here that's just my business and business analysis prompt. It's fairly detailed. It's fairly long, and I'm going to put it into the AI here, and I'm just going to use ChatGPT. I've tried these prompts on basically every AI and large language model, but I'll just use ChatGPT because it's the one that I think the most people are using. And Dave, I'm just going to share my screen here so you can see what the output actually is. Maybe you could talk through it so people can understand what they're seeing.
Right. Yeah, absolutely. All right. So Brian has the text here, and he's got a whole list of questions. So he has at the top business analysis, and then he has his identifiers. He has the mission for the junior analyst. It has the execution trigger, execution sequence, and again, all these are different parts of the prompt that have different questions that he's guiding. So it's very detailed and it's very specific. And as Brian has said throughout the show, there's no just tell me about SPG and I and what do they do.
Yep.
It's far far more involved than that. So I'm very curious to see how this is going to, what kind of answer this is going to give us.
Yep. So this prompt that I built, all I did is I copied it from a database that I have. I pasted it into ChatGPT. It processes all that information, and I've programmed it to say, okay, I know the instructions. What company do you want me to research? So I'm going to type in is it S&P Global? Is it the name of the company?
That's the name of the company. The ticker is SPGI.
I'm going to type in S&P Global and then SPGI. I'm going to push enter. It's going to think for a couple of seconds, and then I'll read off the sections that I have one at a time, and you can tell me if it matches what you know about the company here.
Right.
So I'm going to act.
I want to notate that he's using ChatGPT 5.
Yep, that's a good point.
Yeah, so it's version 5. So you will get, if you use 3.2, for example, I'm not sure what that exactly it is, you might get a little bit different answers. So if you have the ability to use the most recent models, I would encourage you to do so.
Yep. So I'm going to read off a bit about the prompt here. So the very top of the prompt, it came back in about, 10 seconds or so. It says it's using the information that I have from S&P 500, S&P Global's 2024 10K, the most recent annual report. And it's also using the 2025 Q1 10K, which is the most recent quarterly report as of April of 2025. And right next to it, there's a link for the SEC filing. And I'm betting if I click over to that SEC filing, there's the 10K. So this is the document that it pulled the information from. Okay. So the first thing I have this prompt do is say, what does this company do? So Dave, this says S&P Global provides financial information, data analytics, and benchmarks to capital markets. It has credit rating and relating analytics. It has market data, workflows, and analytics. It has commodity and energy, market intelligence, indexing, benchmarks, and asset-linked products, mobility, and automotive-related products. And it got all of this from SEC filings. Is that accurate?
Right on the money.
Great. Okay. So that's prompt number one. What does the company do? Number two, this is all part of the same prompt. How does it make money? So it says, okay, S&P 5 Global's revenue comes from multiple sources. The breakdown is as follows. Subscription/recurring revenue from data, fixed-free workflows. That was $7.4 billion, or 52% of the total. And you can see the source right there is an S&P Global SEC filing. Number two, non-subscription transaction revenue, about $3 billion from ratings, underwriting, and one-time fees. Non-transaction revenue of surveillance, maintenance, and annual revenue. It has asset-linked fees, which are about 7% of revenue. Sales and usage-based royalties, which are 3%, and recurring variable revenue, which is about 4% of revenue. And it has operating profit of about $2.7 billion. Is that roughly in line with what you know about the business?
Yeah, that's exactly in line with what I know about the business. This is cool.
Yeah. Okay, great.
As an understatement.
Question number three, I have it to program to say is, okay, who are the customers? This says the customers are corporations issuing debt or bonds, investment banks, governments, municipalities, commodities producers, indexing licensing, and automakers and suppliers for its mobility. Is that accurate?
Yeah, it is. Yes, very accurate.
Great. Okay. Next question. Where does it operate? And this says geographic breakdown. The US is 61% of revenue. International is 39%. Europe is 23%. Asia is 10%. And rest of the world is 6%. And again, the original sources are right next to each of these numbers. So if I'm like, where did it got that from? I can click a link instantly to go to that information. Does that also sound accurate?
I think so, but honestly, I'm not entirely sure. So maybe could we check on the source to just to verify, because I truthfully don't know that.
Yep. So we're going to have to do that the slow way, to be honest. I'm not sure where in the SEC filings would be the fastest way. It just links to the filing itself. It doesn't say where in the filing it got it from. So maybe that would be a prompt. Maybe that would be an improvement. I do see on here it has subscription revenue of about 7.3 billion, non-subscription of about 2.9, asset of about 1 billion. So all of that matches actually pretty darn closely with what it said
really
before.
does, yeah.
I would say that is spot on. Let's see if they have. Okay, here we go. Total revenue in the U.S. it says 61%, and international is 39%. That's where it is. So here it says 61 and 39. So
perfect.
ChatGPT nailed it on that metric.
Yes, exactly. Perfect. Awesome.
Great. Next dynamic I have is how often do customers buy? So I want to know, is revenue recurring or is it one-time in nature? Here's what ChatGPT said. It says, many revenue streams are recurring, like subscription, surveillance, and index licensing with annual or multi-year contracts. Some revenue is transactional or event-driven, especially ratings like IPOs, fees on new issuance, and bonds. This mix gives stability. It has a leading portion, 50% is predictable, with remaining tied to market activity. Customer retention is generally high and due to switching costs, and subscription revenue grew 7% year over year. Would you agree with that analysis?
I would agree with that analysis. Our junior analyst is doing a good job.
Great. Next, can it raise prices? Right. This is an analytical question, right? And this is all from that single prompt that I did. And it says, yes, to some degree. Here's some supporting evidence. The nature of proprietary data gives some pricing power. Increase in substantial subscription or usage-based royalties shows ability to grow pricing or expand volumes. But competitive pressure, regulatory scrutiny, especially on ratings and use of alternative data providers, can limit price hikes. And margin sensitivity at scale. Cost of delivering data is partially fixed, so margins benefit from revenue growth. What do you think of that?
Yeah, I think that's pretty spot on.
Okay, great. So ChatGPT is doing pretty good so far. And then finally, the final question here is, for me, what happens in a recession? I want to know, is the business recession-proof? Is it recession-resistant? Or is it highly sensitive to recession? And this says, transactional revenue tends to decline sharply in weak capital markets. It says recurring revenue, such as subscription revenue, provides a buffer. In past downturns, demand for risk analysis, credit assessment, and stress testing may increase by offset by issuance and activity. Management often warns of exposure to capital market cyclicality, and the balance between stable and cyclical revenue gives resilience, though not immunity. What do you think of that analysis?
I think it was great, especially the part about warning of exposure to capital market cycles, because every single earnings call that you listen to, that is something the management discusses in their pre-prepared remarks. So it's obviously very top of mind for them.
So, okay, I would say it's fair to say that this prompt plus ChatGPT did a pretty darn good job with the stock
really
that
did.
I don't know well that you do.
Yes, very much so. And I think the other thing that's kind of revealing to me is if you worked through this, if you took a company, let's say we took this company, you don't know it, this would be a really, really good way to start getting your handle around what they do and what could be some potential growth levers and risks for the company.
And again, if you were doing this the old way by reading SEC filings and manually doing it, I would argue it'd take at least half an hour, maybe more than an hour to just get the information we just had.
Yeah, easily.
Yeah. So it took 10 seconds to get the data, analyze it, and give it to us in the format that we want. And then maybe like 2 or 3 minutes to read through the information. So this is the power of using AI to analyze stocks.
Yeah, that's awesome. All right. So let's look at something else. Can we look at the Moat for SPGI?
Yep. So I have a whole analysis here, a whole prompt here that is specifically for moats. So I'm going to now copy that and put that over to ChatGPT. I'm pasting it in. All of these prompts are like thousands of words long, so they're specific. So I entered it. ChatGPT says, okay, what company would you like me to do this moat assessment on? And I'm going to do the same thing. So S&P Global /SPGI. I actually find it's really helpful to put the name and the ticker in there just to minimize chances of hallucinations or anything like that. All right. So we have a result back here. So we have
that's awesome. Look at this.
Moat analysis for S&P Global. So it says the moat size is currently narrow. It says the moat direction is stable. It says the primary sources of moats are switching costs and intangible assets. And there's an executive summary. It says S&P 500 Global exhibits durable advantages via high switching costs through deep integration of data analytics into client workflows and powerful intangible assets, namely its brand, index, and rating licenses. However, network effects are limited to specific verticals, cost advantages are fuzzy, and competitive threats like alternative data providers suggest its moat is unassailable. So that's just the overall view. Would you agree with that?
I would, definitely.
Okay. So I have this prompt designed to give you an overview at the top and then more details down below. So it actually goes moat source by moat source to tell you, is it present? What is the reason for your analysis, and also provide supporting data. So for example, it says the number one moat is switching costs. And it says the analysis is that this is embedded deeply into clients' workflows, ratings, etc. And it has metrics here that's supporting. So it says the subscription recurring revenue comprises 52% of total revenue. Morningstar data, which is an approved source, in my opinion, says that it's established a wide moat from its data-driven benchmarks, credit ratings, and commodity prices. And it even has a quote from the most recent call, or the most recent thing, saying S&P Global has an array of high-margin, moaty businesses. And that quote comes from a Morningstar article of 2025. We see intangible assets. It says, yes, there are some intangible assets present. Same analysis. Network effects, it says, are not present or very weak. It gives analysis. Low-cost production, it's not present. And then counterpositioning is not present. So then it also has risks. So what are the risks to the company's moat? Alternative data and analytics firms, most notably AI and non-traditional credit scoring. The competitive landscape includes Moody's, MSCI, Bloomberg, Reuters, FactSet, and more. It has a valuation premium. And yeah, so there you go. What would you say that what do you think of this moat assessment?
I think it's spot on. I love the fact that it analyzes the moat, gives you a summary, gives you sources of where it's determining what the moat is, as well as metrics to look at to analyze the moat. And I also love the fact that it doesn't just give you the ones it definitely has. It also outlines the other potential moats that maybe we may or may not think about in relation to a particular company and whether they're present or not. And I think also using Morningstar data to help with this part of the analysis is very important, because if they're known for one thing, it's moat analysis, and that's like kind of their bread and butter. So I think that's really critical to helping figure this out.
Yeah. Now, to be completely fair, doing analysis like moat is actually quite difficult, because that's like a squishy thing, right? So
Right.
I have the prompt programmed to analyze moat source by moat source. I have a program to say, what's the current state of the moat? And then I also have a program to say, is it widening, stable, or shrinking? And I also ask it to provide direct evidence with links to show why it came up with that analysis. Sometimes you do have to rerun these prompts, because if you know a company, you're like, I don't necessarily agree with that. And disagreeing with what it gives you is perfectly fine. Something like moat is a squishy topic, but I do think that this can dramatically help you to think through the process of analyzing a company's moat.
Yeah, for sure. And that point about the squishy is, I think, very, very important. Sometimes people will argue that these particular moats in particular are hard, fast, set in stone, factual, when it could be pretty squishy. So I like that. I like that term.
For sure.
And I also agree with if the AI doesn't give you an answer you want, it's not the final answer. You can go back and ask it to rerun the analysis, maybe tweak something, different things you can do to get what you think is a better answer. Because to Brian's point, just because it gives you an output doesn't mean you have to take it as gospel.
Yep. In fact, I highly discourage you from treating it as gospel. Your assumption going in should be the analysis is wrong, and you should ask the analysis to prove to you that it is correct.
Yes. Yeah, that's awesome. Awesome. Can we do another one?
Yeah, let's do it.
All right.
Why don't we do the business phase analysis? So this will help us to figure out which of the 6 phases of the business growth cycle a company is in. Are your listeners familiar with the concept?
Yes. You and I have talked about it, and we've talked about it on the show before.
Great. So the general concept is you don't want to analyze young companies, startups, the same way that you analyze mature companies, right? So just like the humans have a development cycle, businesses have a development cycle, and you want to analyze them based on the appropriate time frame. The real simple analogy here is you wouldn't judge an 2-year-old by its SAT score. right? The 2-year-olds
Right.
are too young to have SAT scores. You judge it by its development and its language and its ability to walk. Same way you wouldn't judge an 80-year-old by its work performance or how many pounds it can lift on the job, right? So
Right.
just as the metrics for humans change over time, the metrics for corporations change over time. So this is probably the hardest prompt, the one that took us the longest to kind of analyze. But the idea here is that you put this prompt in, and it'll tell us which of the 6 phases of the business growth cycle a company is currently in. So I just copied it over and did paste. It's going to use SPGI, and here's what it says. So using data from the most recent 10K and the 10Q, this says SPGI is currently in phase 5, the capital return phase. It says the stage level confidence is very high. So the AI is very confident that it's in that phase. What's the evidence for that? It says operating income is positive. Revenue is growing 14%. It is returning capital to shareholders. So it bought back $22 billion worth of buybacks and dividends in 2024. Would you agree that it's in the capital return phase?
Absolutely.
Great. So the prompt work. Now,
Yes.
in addition to just saying which phase it's in, I also have it programmed to help the user think through valuation. So it does say, okay, since it's in phase 5, what valuation methods are most useful for analyzing this business? And the AI says trailing price to earnings, trailing price to free cash flow, and reverse discounted cash flow. It says these methods are most useful because this company is mature, profitable, and actively returning capital to shareholders. At the same time, it says which valuation method should we avoid using? And it actually says forward price to earnings, forward price to free cash flow, price to sales, and price multiples oriented towards high growth companies. Well, would you agree with that or disagree with that?
No, I 100% agree with that.
Okay, great. So it has what being in phase 5 means for investors. It has some original filings and stuff down there. So this one is, of all the prompts that I've built, this one's the hardest one to get right, the most likely to be wrong. I'm glad it worked out just fine for this company.
Yeah, it looks great. So could we do you have a valuation prompt?
So I do have a valuation prompt. When it comes to valuation, I actually find that AI is extremely limiting. For valuation, I actually vastly prefer to use fiscal.ai, which is a tool that allows you to see a company's multiples over a longer term history. I don't think that AI is good for that yet, or at least I haven't cracked the nut on valuation for that yet. So I do have a valuation prompt, but what the valuation prompt does is it tells you which valuation methods to use and which ones to avoid.
Okay.
So if we're going to do valuation analysis, I would say AI isn't great for that right now. Let's focus on fiscal.ai or some other tool.
All right. Well, then maybe we could take it for a spin with risk. So
Sure.
SPGI is a company a lot of people don't know. Risks are always important to understand because protecting our downside is just as important.
Yep. All right. So I'll copy over my risk prompt. I like this one a lot. This one's color coded nicely. So it's doing the analysis and it says, okay, what company would you like me to do? SPGI/S&P Global. And let's see what the risk analysis says for this. Okay. So analyzing SPGI's risk using its, again, most recent 10K and 10Q. So again, proving up top that you found the initial filing. So it says the overall summary. ChatGPT says the overall risk level here is medium. The primary risk factors facing this company are outside forces and disruption. The key mitigations is that it has a diversified business line, it has a regulatory moat in place, it has a strong brand, and it has client lock-in. So that's the overall assessment. And then I have it go risk detail by risk detail to kind of analyze them. So risk detail number 1 is concentration risk. ChatGPT says this is essentially not a risk at all, and the trend here is stable. And it says the company has a tenant base that is diversified with no meaningful customer or contract manually providing concentration risk. Is that accurate in your mind?
Yes, it is.
Okay. Risk number 2 is disruption risk. ChatGPT says this is a yellow risk, and this risk is actually getting worse. It says the risk factors mentioned are social and ethical issues relating to the use of new and evolving technologies, such as AI in our offerings. And the spin-off plan for the mobility unit suggests strategic repositioning to reduce exposure to disruptive pressures. Would you agree that AI is a disruptive risk to this business?
Yes.
Okay. And number 3, outside forces risk. So it says this is a red risk, and this risk is getting worse. So S&P says we have prolonged difficulties in global credit markets, and changes to the regulatory environment are affecting our business. And it calls out climate change, regulations, and geopolitical shifts are flagged as emerging operational and regulatory risks. What would you think of that?
Yeah, I think that's pretty accurate, especially with the regulation and geopolitical shifts. There's a lot of instability in the world, and that's causing pushback on SP and their global ratings.
Would you agree that this is a red risk, or would you say it's a yellow risk? Because it's kind of fuzzy on is it red, yellow, or green?
I guess I feel like it's maybe yellow, yellow maybe with a tinge of red.
Okay. Next, competition risk. So this says yellow. The trend looks stable. So the 10K does competitive risk for ratings, market intelligence, indices, and commodities. And it says while S&P has numerous advantages, there are several well-capitalized competitors such as Moody's, MSCI, and Bloomberg operate in overlapping domains and offer alternatives. And then below there, I have kind of a risk matrix where it lists out the 4 major risks, their current rating, green, yellow, or red, the strength of the company's argument, and the trend. So then it says, here are the company's defensive positions. So regulatory entrenchment and licensing are a major plus, the brand and client integrations, and it has broad segment diversification. So what would you think overall of the assessment, risk assessment here from ChatGPT?
I think the junior analyst did a pretty good job.
Good. Yeah. So sometimes I've noticed when I do this analysis on companies that I know well, I'm like, I think it's overemphasizing this risk or it's underemphasizing this risk. But again, I like that it's thinking in a structured way, and I've programmed it to look at concentration risk, disruption risk, outside forces risk, and competitive risks, which to me are probably the 4 most important risks. Aside from valuation, that's a separate risk. But this is just pure risk to the business.
Yeah, for sure. And to your point earlier, it's a squishy section, and so I think having some judgment involved with what it's giving you will certainly help.
Yeah, there you go. Perfect. Great.
All right. So this is amazing. And running through all of this, how long do you think running all the prompts that you've created would take?
I've done it, and I mean, if you have the prompts copied and pasted and ready to go, the how long it takes is basically depending on your reading speed, right?
Mm-hmm.
So you can do a full using these prompts. I can essentially take a company through each of these prompts and fill out essentially my investing checklist, or at least have a very good high quality confidence of the company and whether or not it's a fit for my investing style within 5 minutes, 10 minutes, I would say max. Again, it does depend on your investing speed and how fast your LLM is working that day. The first time you do it, it's obviously a little clunky, copying and pasting, learning how to do it. But to me, there's no doubt that this dramatically speeds up your analysis process.
Yeah, for sure. And I think this would be perfect for retail investors that don't have a lot of time. People that, work a job, have families, and want to do stock analysis. This can, to your point earlier, can really help you turn over a lot of rocks quicker.
Yeah. Or I would also say that a lot of retail investors struggle with doing the analysis themselves. They don't know what questions to ask. They don't know what frameworks to think of. They don't know what to even analyze in the first place. So that's why I built the prompts in the order that I did. So at least you can have a structured way to think like a professional analyst and judge through the business. I don't claim that these are the only things you need to think about are the only things that matter. And I'm always going to be working on these prompts. I mean, AI moves very fast, but I would say that these prompts are really fantastic about giving you a very strong deep dive. And dare I say, they probably do more work and analysis than 99% of people that buy stocks.
Yes, I would probably strongly agree with that. All right. So let's kind of recap a little bit. So So I guess 3 takeaways, if you will, from today's episode. So number one, whenever we're using AI in any way, shape, or form, we always need to demand a citation from SEC filings or company reports. That helps us verify and make sure that we avoid hallucinations. We need to use modular prompts. So kind of like Brian set up, and basically shorter sections, not that the prompts themselves are short, but shorter sections: business, moat, financials, risks, etc. And then we need to assign roles. This is very critical, and structure so our junior analysts can stay on task and get everything done. Now, Brian, you and your team, you guys, the other Brians, have created a tool and these prompts that our listeners can get. Would you like to give some thoughts on that?
Yeah, so the prompts that I laid out and that we used, there's 7 of them in total. They are we offer those through a product that my company built called Stock Simplifier, which is a checklist that we use to analyze businesses, and it comes with a full course that kind of teaches you how to look at each of those sections in detail. So how to figure out which stage of the business growth cycle a company is, how to analyze a company's moat, how to analyze its long-term potential, the key metrics to look at, the valuation, all of that. So that course is called Stock Simplifier. And just recently, within the last couple of months, a couple of weeks actually, we took the prompts that we just shared on this episode and we built them into the database. So the prompts that do the analysis for you are also included in Stock Simplifier.
Which is awesome, because not only do you learn how to analyze a company, then you get these prompts that can help you do it faster. And that is an amazing thing. So Brian has included all the prompts in Stock Simplifier. It's normally $199, but our listeners, IFB listeners, are going to get a 50% off discount at stocksimplifier.com/IFB. And yes, I will put that in the show notes so you guys can check it out. But it's stocksimplifier.com/IFB for those of you that are driving or on a lawnmower, so you don't have to take notes. And again, Brian, as always, this was super educational, a lot of fun, and I learned a thing or two, and I'm super intrigued by all the prompts that you created, and I think it's super valuable.
Yeah, I will point out that AI moves incredibly fast. So one thing that we do with everyone that purchases Stock Simplifier is every 2 weeks, we actually run these prompts through. We take a company and we run all of these prompts through them and do the analysis, because we do plan on changing these prompts, changing our process as new AI techniques and features come about. So if you want access to that and you do get Stock Simplifier, join us for the weekly sessions, because the way that you analyze using AI today, I guarantee will be changing 3 months from now, 6 months from now, et cetera.
Yeah, exactly. And I guess a key point then is, as you guys adapt to the changes that are going on with AI, people that have bought it in the past will get those updates, correct?
Yes. Yeah. It's a one-time fee to get access to the prompts. And as we make changes to them, you'll get access to them as we go.
Yeah. All right. Awesome. Well, as everybody could tell by listening to Brian today, he knows the stuff, and this is super valuable. And I think it could help you greatly in your investment process and finding great companies. So with that, we'll go ahead and sign off. You guys go out there and invest with a margin of safety. Emphasis on the safety. Have a great week, and we'll talk to you all next week.